Most traders know how to enter a calendar or diagonal spread, but very few know how to trade the total P&L or determine whether the strategy is actually profitable over the long run. In this video, I will show you exactly how I record and analyze calendar spreads using my options and stock trading journal. Tracking multi-leg option strategy with different expiration dates and multiple rolling positions, such as calendar spread, can quickly become complicated. Without a proper tracking system, it's difficult to calculate your actual returns and evaluate your long-term performance. It's almost impossible to know whether your calendar spreads consistently outperform your vertical spread or iron condos if you aren't tracking the data. Let's go through a sample calendar spread. A calendar spread involves buying a longer dated options while selling a shorter dated options at the same strike price. In this example, on 11 May 26, I buy a 550 call expiring on 19th of June 26 and sell a 540 call expiring on 22nd May 26. For the long call, I pay a debit of $12.50 per contract, while the short calls generates a credit of $5 per contract. This gives me a net entry debit of $7.50. On 22nd of May, the short calls expire worthless and I sell another short call expiring on 5th of June, collecting a net credit of $4.50 per contract. Then on 5th of June, I buy back the short call for $1.20 and sell another short call expiring on 12th of June, collecting $2.80. This results in a net rolling credit of $1.60 per contract. Finally, on 12th of June, with 1 week remaining before the long call expires, I close both option legs. The short call costs 50 cents to close, while the long call is sold for $3.90, giving a net exit value of $3.40. Now let's record this trade. First, enter the trade setup information, including the trade number, trade direction, select options from the drop-down list, enter the ticker symbol, choose the strategy, and input the strike price, expiration date, and break-even price. In the Trade Finder drop-down menu, select the trade you want to highlight so it's easier to enter the trade data. Next, enter the stop price at entry, entry date, number of contract, net entry price, and any commission paid. Then record the risk management information, including the buying power, which is the amount of capital required by your broker. For a calendar spread, the buying power is simply the net debit paid to open the position. You can also record the maximum profit, maximum loss, and your risk percentage for the trade. If the trade involves rolling, simply enter the rolling details in the dedicated section. Input the number of contracts. For the first rolling, input the rolling date, strike price, new expiration date, net price per contract, and the rolling commission. For the second rolling, input the rolling date, strike price, new expiration date, net price per contract, and the rolling commission. The journal will automatically include the rolling premiums when calculating the total profit or loss for the trade. Once the position is completely closed, enter the stop price at exit, exit date, number of contract, exit price, and exit commission. You can also document your trading psychology and notes such as your entry mindset, discipline score, exit reason, and any lessons learned from the trade. Recording the entire trade in a single row keeps everything organized while making analysis much easier. The journal automatically calculates key performance metrics including days in trade, total profit and loss, return on investment, profit per day, and cumulative P&L. If you have traded multiple calendar spreads and want to know whether the strategy is actually profitable, simply open the Strategy tab, select Calendar Spread from the drop-down list, and you will instantly see statistics such as your win rate, average winning trade, average losing trade, largest win, largest loss, and your longest winning and losing streak. The table below also displays every calendar spread you have taken, so there is no need to search through your trading journal manually. This trading journal is suitable for a wide range of option strategies, including calendar spreads, diagonal spread, covered call, cash secure put, vertical spreads, long calls, long puts, and even stock trading. That's it for today's demonstration on how to trade calendar spreads using my trading journal. I have been using a trading journal since the beginning of my trading journey, and it's helped me identify which strategy consistently perform well and which one need improvement. Having reliable data gives me much greater clarity and confidence in my trading decisions. If you would like to simplify your trade tracking and analyze your trading performance over time, you will find the link in the description and the pinned comment below. If you found this video helpful, don't forget to like, subscribe, and turn on notifications for more trading journal tips and data-driven trading content. Thanks for watching, and I will see you in the next video.